Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on December 26, 2012, the day after Christmas, and we're going to look at the S&P 500. We had something happen today that I think bears mentioning. There's almost always something that bears mentioning, but here for the past few weeks it's been fairly non-eventful. But we got something to consider today, and I made a few changes in the chart as well. Before we take a look, I just need to remind you that the website and the video are for educational purposes only, and nothing stated in the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you should be making investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I am just a guy who draws lines on charts. So let's take a look. Okay, we're starting out looking at an hourly chart. And what I want to show you here is we have been looking at this rising channel that was established after the lows of the middle of November. Today, without much question, that lower channel broke. And you can see how it did so fairly, in a fairly obvious fashion. It was like, we want to stay above this, we want to stay above it, but when it breaks, it just kind of, gave up a pretty quick 10 points or so, roughly, not quite 10, but 8 to 10 points. It just came within just a matter of a few minutes. Then we spent most of the day trying to mount a rally, and what looked to me to a desire to maybe back test this line here. I had taken a smallish SPY position back last week when we came down to these levels right here. I think I was in SPY at 142 and a nickel or something like that. I went ahead and closed that out for once this broke. I went ahead and closed out for no gain, no loss, no gain. Oh, I think maybe I paid half of the commission on the trade. But anyway, what $6? But really, it was an even trade, and I think that was probably the right thing to do. And I want to remind you, and of course, tomorrow and next week could show that to have been the wrong thing. But when this line broke today, I said to myself, I'm not going to bail on this right now, because that trade was predicated upon the idea that this bottom line would hold. I said to myself, I'm going to wait for a rally, because we'll probably get one, and we could get even more of one. But regardless, went ahead and said, I would rather be even and just erase that trade than try to eke a little something out of it and end up, losing. So you can see a clear break of this lower rising support line. Going back to the hourly chart, there's something I'm going to do. I'm going to take this line that we've been looking at as a possible head and shoulders neckline. You can see we never reached that. I thought we would reach up to that line, but we didn't quite do it. So this is what I'm going to do. I'm going to move this slightly so that we now take this point in the middle of October and this point in late December. And if this does end up being an inverted head and shoulders pattern, that I think would be the neckline. So with that in mind, and again, I will remind you that it's nothing until it confirms. But with that in mind, I'm going to turn this line purple, which is our neckline color, and I'm open now to the S&P maybe coming back down, finding some support in the low 1400s, 1410, maybe even coming down into the 1390s. But I'm open to now the possibility of an area of consolidation occurring over the next 2 or 3 weeks, 3 or 4 weeks even, and then another attack on this line. If we get that, then I think this could still end up being an inverted head and shoulders. But for now, this rally off the bottom of this November low, I think it looks like it's that rally is about over. Again, we may get another back test up here, but you know, I don't want to get too adamant about this inverted head and shoulders thing quite yet, because we're not there yet. But I'm just looking at it and thinking to myself, this is sort of what it looks like could happen. But for now, all I can tell you with reasonable assuredness is that we should have support at this red line down in the 1340s to 1350s, because that would be, and that's pretty long-term support. That is rising. So if it's touched at some point down the road, this line would be higher than that. We should also find some support at this neckline from this small inverted head and shoulders back here. Additionally, this line should now serve as resistance. And we've got a couple other lines of resistance now. One that's almost, I don't want to say parallel, one that's almost flat, and then one that is descending. So we've got a situation where we now, I think, can call this resistance. This is resistance. This would be resistance. And this should be support. So I'm looking at a situation where it would not surprise me to see the S&P juke and jive, if you will, underneath these resistance lines and above these support lines. And if that's the case, we could do that for a number of weeks, then mount a new attack on this line, this descending candidate for a possible neckline. So let's just kind of take that into the end of the year and into the new year, see what develops. But for today, the thing that happened that I think is technically significant is a break of this rising channel line. So let's keep an eye on that, maybe a back test, but let's see where we now find bottom. And then once we have another day or so of trading, let's see if we can identify some kind of pattern that might develop from this point forward, taking this 1447, 48 high into account. See what develops to the right of this area right here on the chart that we might be able to use as a channel, or maybe some other kind of pattern that helps us see when we might be ready to turn upwards again. But for right now, we're broken channel, and even though it's not a tremendous amount, I believe the way that it broke, to my eye, looks to be technically significant. And hopefully by the end of the week, going into the weekend, we'll have a little bit more data to where we can flesh this out a bit more. So for right now, we've got a break of that channel. I'd watch that real carefully. If you might get a little bit more of a back test, but I took today's late day little rally as a good place to get out even on a SPY trade. So look, guys, appreciate you watching the video. If you didn't see the video yesterday, I wish you a belated Merry Christmas, and look for the video tomorrow, and then of course the weekend weekly review. Take care of yourselves.